Order flow can be extremely challenging to read in real time while you're live trading, let alone trying to make observations from it and all. So I'm going to show you a neat little process that I use to kind of make observations from order flow so that I can get better at reading it in real time while I'm trading. Now this is a process, so we're going to cover a few things. The first thing that we're going to start to cover is the prerequisites. Next, I'll jump into like a live demonstration of like how I go through the process and how I make these observations. Last but not least, I'll give you a repeatable framework that you can use on your own to try it out and see if it helps you or not. The process is simply reviewing your film. I've talked about it before on this channel, but I feel like truly reviewing the film is one of the most important things that I've done to help me make insights to just get better as a trader. So this is something that I've been using for quite a while, and I'll kind of walk through how I've been going about it. The first thing we should probably start off with is the prerequisites in order to get started. So there's going to be a few things that you may need. Now this will cost some money, but again, you're investing in your skill, you're investing in your craft. You should look at this as an investment with a potential return on investment or an ROI. So first thing that you're going to need is you're going to need some sort of screen recording software. Pretty much anything that you can record your screen with. I know I use OBS mainly, but you can also use Streamlabs. Streamlabs I used to use, but you just need something where you could kind of record your screen, kind of like what I'm doing right now. So the second thing that you need is you need some sort of order flow platform, some sort of platform to view order flow. I mainly use Bookmap. It's the only one that I've been using. I've tried out others like I know Quantower has their own. Quantower, I think Motivwave. There's even this new one out called, I think, Deep Charts. So there's a lot of order flow platforms out there. Bookmap has the kind of like the heat chart for liquidity, which I'm a fan of the most. I know like even Quantower has it, but like Bookmaps is the one that I'm just most likely just used to, and I just kind of stick to it. So that's why I just pretty much recommend them. Not affiliated, but it's just what I use on an everyday basis. The next thing that you're going to need is you're going to need some sort of level 2 data, right? So we can kind of look into the cost of everything so far. So this right here is pretty much free. So this is free. This one will cost you probably about 49 bucks a month. Most of them will cost you around $50 for an order flow platform if it's not baked into your trading platform already. Level 2 data is going to cost you about $34 if you're going the CME route. So there's that. So all in right now, we're a total about $83. The last thing that you're going to need is you're going to need some sort of way to store your film. So I recommend an external hard drive, just because like the space on your computer really may not be that much. An external hard drive is just something that you could kind of plug in. I don't want to mess up the recording of my video, but I literally have an external hard drive. I have 2 of them just plugged into my computer. That way all the recordings can just get saved to the hard drive and I don't have to worry about space. If you're looking to buy one, some really good recommendations I would suggest is probably some from like Amazon or Best Buy. Walmart's really good. This is the one that I have. Whoops, let me go to this one. This is the one that I have. It was a great version of it. It was about $100 at Best Buy. You can get you something cheaper, right? You can get you something like this, but usually right now, because of all the RAM prices and stuff like that, these prices are kind of going up a little bit. But I just recommend get you something like cheap. Get you like a 1 terabyte. 1 terabyte is good enough on storage. 1 terabyte of 5 gigabytes is good enough. You probably can get something like this as well too if you want to go higher up in budget. If you want a little bit like more quality, I would recommend going with like a T9, but a T7 is pretty good as well too. So now that we have all the prerequisites out of the way, right, we could kind of talk about the, I guess we can so-called say the process, right? So the process, right, once you have this, the flow kind of works like this. You screen record your sessions with OBS or Streamlabs. The main thing that you want to record is you want to record your order flow platform with your trading platform. If you have them both separate, just put them side by side so you can see the candles, because the candles is most likely what you're familiar with. It's probably what you've been trading with for a very long time. So you want to have it with the candles and just to kind of have it side by side to kind of get familiar with how these candles are moving and get more, I guess you would want to say, in tune with order flow a little bit. The next thing as well too is you are going to need level 2 data. So here's the thing, here's what comes with level 2 data, right? Maybe you don't need level 2 data. So order flow isn't just about like looking at where like liquidity is, right? You could also just kind of use order flow to get a sense of like how market executions are kind of going right now, right? Like who's winning the battle on market X, right? So if you're like just looking at like executions, you don't need level 2 data. You'll need level 2 data when you want to know like where resting orders are at. So like if there's 50 contracts at, let's say, 200, right? Or 250 in this case. And then there's like 14 contracts at 249, and then like let's say another 16 contracts at 248. If you want to have this kind of like visualized on the charts and stuff like that, this is when you'll need level 2 data, because level 1 won't allow you to see this. So this is why I buy it, because I just want to see it, because it's part of like me looking at my strategy and stuff like that. And last but not least, you'll just save, what you're recording on your screen recording software to your external hard drive. That's pretty much just that. So now let's get into the context setup, or in this case, what I call is pretty much how you start your film review. So we're going to go into a live demonstration, but usually the first thing you want to ask yourself is just mainly 2 questions. First things first, what is the focus for today? This is usually the guiding question. This guides what I'm looking for in my film reviews, and also it's mainly, the question is usually around something that I'm looking to fix, a problem that I'm looking to solve, or like a new observation that I made in a session that I want to dive a little bit deeper into. Okay, so I'm gonna get into the process in a second, because I have like a step-by-step process and a framework that you could take away, and I'm gonna get into that in a second, but I want to go through the live demo first. So the live demo. So the first thing that I'm asking myself key questions. I want to know like what's the focus for today's review. So the guiding question that I want to kind of look at today is going to be, what does a breakout look like in the order flow versus a fake out? Doing this, or having this guiding question, will help me in real time to hopefully avoid more fake outs and get into more breakouts earlier. So but now with that out of the way, we need to also kind of take a look at the conditions. So I always like looking at what the conditions are. So the VIX today was at 20, which is, in this case, it's about average for most parts. It's not extremely low, but it's not extremely high like it was 2 weeks ago. Now, the other part is ATR. ATR, honestly, for this session, felt like it was averaging low 20s. And when I'm talking about like ATR and VIX, these are just indicators or measures of volatility. For me, at least, this is how I measure it. VIX is my macro indicator for volatility, and ATR is my micro indicator for volatility. So they both were about average. I hate when ATR starts at 20, so that's an insight that I'm going to make, and I'll write that down right here. Now, market sentiment is something like the fear index. So let's see what the fear index was for today. And we was in fear, but we're getting ever so closer to neutral. 2 weeks ago, we was in extreme fear because of the whole war. So it's good to see that we're kind of, coming back to neutral, but like this also means that volatility is dying down. And also, if we could take a look at the VIX, look at this 5-day average, we can see that from the highs of last week on April 7th, like we were at 27, we took a massive drop, and then we just started just hovering around 20. And like this is when my trading trouble stopped, and I started getting faked out a lot more. Probably because it doesn't have the volume that it had from last week, and I have not yet adjusted to it. So we're going to get into watching the film, and there's a 4-step process that we're going to follow. Okay, so I want us to find a key moment in the session. So this first trade is going to be a really good example, because this was a breakout. So what do we see here? Okay, we can kind of take a look at, we already know what's going to happen. We know that it's going to break lower from hindsight. Now we can kind of take a look and dive a little bit deeper into order flow. So when it comes to order flow, there is a few things that I'm looking at mainly. I want to look at how executions are happening, and I want to look at like liquidity. Now, liquidity for me is just where limit orders are resting and the levels that they're resting at. If there's more limit orders resting at a certain area, I will then say this area has more liquidity. If there's less orders sitting at a certain area, I'll say that this area has less liquidity. So let's try this concept out. Very, very simple for me. This area from 332 to 325 has less liquidity than from 320 to I said 320, 220 to 215. This area between 212 and 203 has far less liquidity than between 195 and let's say 192, which has more liquidity. Okay, cool. So the red, the hotter they are, the closer the color is to red, the more liquidity is sitting there. The closer it is to blue, the less liquidity is sitting there. This is the first observation that I made. Very, very simple. Basically, we're looking to see what we can see. Now, as we kind of play this out, I want to see if that hypothesis is true. Yeah. I kind of want to say this first. Take all your observations with a grain of salt, because you don't know if it's true or not, and you'll never really know if it's true or not. You just can figure out if it's more effective paying attention to it or less effective paying attention to it by looking at your edge and expectancy over time as you continue to execute on this hypothesis. However, I will say that I have been noticing myself. Okay, so now this is a pretty good example of me getting faked out. So I want to see what I can see here. So we have 33, 24, 9. Let's just go ahead and say 30, 10, and 25. So about 65 orders sitting up here on the NQ. And then we have 19, 13, 10, 12. There's more orders sitting up here than there is down here, I assume. So even though this level looks very enticing, there's only 19 orders compared to the 24 orders that's sitting up there. So the delta here as well does look like it is not as strong as I'm used to. If I want to make the bet that we run to at least 200 when it comes to delta, then I want to assume we should at least be at around maybe 100 to 120 instead of 39. So that's another sign. Third thing as well too is volume. So if I'm expecting a candle that is going to break out with a lot of momentum, then it should by logic have a lot of volume in the candle. We had 333 for the volume. Average volume is around 1300, which means that if we put it at 13 flat, then that means it's about 650 that we need to be at 30 seconds. Let's see if we get to 650 at 30 seconds. No, we don't. We get stopped out of the trade before we even get a chance. Another observation. These are the two examples, the screenshots of the two examples. So I'm gonna go a little bit bigger on the screen right here. So these are the screenshots from the two examples. This one was the breakout that happened, and this one, oh, whoa, zoomed in, zoomed in, zoomed in. This one was the fake out. So besides attacking a minor low here, I would say we are attacking a candle low here. What are the differences? Well, let's start with CVD. CVD is pretty much the same, honestly. Yeah, CVD is a lot stronger on this one than it is on this one. This one's almost wicking all the way back to like 0 when it comes to CVD. If you don't know what CVD is, I'll kind of draw out a little example. Let me get this booted up. Cumulative volume delta just basically adds up the delta over the span of the session. So in this case, this would be a sum of -1 seller, which means the delta or the CVD will post red. This is my like complete childlike understanding of it to make it as simple as possible. And basically, when it is red, buyer sellers are more aggressive when it comes to execution. So could I make the hypothesis that in this picture here, because we have aggressive, well, a little bit more of aggressive cumulative volume delta forming, we are attacking liquidity lower, the aggression in the sellers is aggressive enough for us to want to visit these liquidity pools lower? We could make that observation. That could be a hypothesis, but we don't know for sure. Just something to look at for later. So less aggressive plus not that much liquidity sitting here and more liquidity sitting up higher is probably the reason why we got the outcome that we did. I mean, you see price just kind of flies up and stops us out. Okay, so just after a little time spent reviewing the session, I already got what I'm going to be looking for tomorrow. we was able to look at our film, we was able to make observations and hypotheses, and now we have a full test that we can test tomorrow and see how it affects our trading. This is the process you go through in order to get better. You have to try something out, look at the feedback, review the feedback, make a change, and then try it out again the next day. What I'll do is I'll be looking for setups that are heading in the direction of bigger pools of orders. So instead of taking trades that look like this, I'm going to be trying to take trades that look more like this. And then on top of that as well too, I want to see a CVD that is painting the picture that supports that they have the aggression to get their way. So instead of a CVD that's looking like this with a very large wick, especially in the direction that I'm trying to shorten, we want to look for more of something like this. So what are we going to do? We're going to test it tomorrow. We're going to see how it affects our trading tomorrow. We're going to see if we have gotten a better win percent on a day, or better net, we avoid fake outs more often by looking at these two variables. Now, I promised to give you guys a framework, and that's what I'm going to do. So, as promised, here's the framework. So the first thing that you want to do is you want to find a key moment. So usually something like trades taken or missed. Next, you want to solely watch the order flow. And when you're watching the order flow, what you're going to be paying attention to is two things. The first thing that you're going to be paying attention to is market execution aggression. So this is just basically like looking at the bubbles and just seeing like who's winning, who's making new lows, who's making new highs, who's more aggressive. And then you could also like as well too, right? CVD, like what's the CVD looking like? What's the delta looking like, right? Order flow is more than just looking at like limit orders, visualize, heat map. There's so many other things. The word order flow is the definition. You want to look at how the flow of orders are going and try to like kind of make an idea of who's winning the battle, right? The next thing is I'm looking at like limit order placement, right? So you want to look and see where are the orders sitting, right? You want to pay attention to all of these things, especially in your key moment. You want to try and find observations or patterns that you can reuse throughout your trading sessions. Next, screenshot, annotate, journal, whatever works for you. You're doing this to write it down so you can review it for the next trading session, right? And last but not least, make it a goal to watch for the next session. Just like kind of how I made the goal to look at areas of more liquidity for when I'm taking my breakouts, and also looking at CVD to paint the picture that we have the aggression to go get it. You're making the same goal as well too. So when you're looking at this, when you're looking at your film, you want to find a key moment. You want to solely watch the order flow in that key moment to see how it's panning out, to see if there's any patterns or insights that you can pick up. Once you think you found an insight, it doesn't have to be true. You don't know if it's right or wrong, but once you think you found something, screenshot it, annotate it, write it down. And then once you've created your thesis or hypothesis, and I use the word hypothesis here because it won't be true or false. It's not something that you know will work or not. It's something that you have to test out, and you know, nothing is right or wrong in trading. It's just a matter of what's more effective and what's less effective. You trade it and you test it to see how effective does this help you out or does it not help you out. This is the process that I go through when reviewing my film, and it's helped me out a lot, especially from my early days, like early last year when I was just first getting introduced to order flow. Compared to now, I've gotten a lot more comfortable. I hope you guys gained some sort of value out of this video. If you did, feel free to engage in this video in some type of way. And you guys know my motto, be a problem solver. I'll see you guys next time. Until the last time.